What's up, traders? This is Vee Trades, and today I'll be doing a technical analysis breakdown for Facebook with the ticker symbol FB. Remember that if you want a chart analysis guaranteed to be done, please read the description below. Before we begin, please take a second to give the video a like and subscribe for more chart analysis. I appreciate all those who have already subscribed and liked my videos. Just a reminder that this video is for entertainment purposes only, it does not constitute any financial advice. I will first go over what I see on the daily chart and finish the video off with the weekly chart. The last time I looked at Facebook was on December 23rd, and the next day later we had a huge gap up. However, it looks like prices got rejected at the 349, 350 level because it did it before multiple times when we started selling off, and now it looks like we had a failed breakout side of these swings just to trap in some shorts, and now we're getting a big reversal bar, so this could look promising for the longs. Let me show you guys the support. So right here at 324, 325 level, the bulls are defending the price action, and it looks like the bears are in control right above the 345, 350 level. So you can see that was some sideways action here for a couple of weeks. We had a failed break here, which led to a failed break outside on this side because market is symmetrical. If we do something on one side, we normally typically do the same thing on the opposite side. And we got that fail break lower, so this could be a trap, and we could probably see some big moves coming. Let me show you guys the bigger range that prices are inside of. You can see that the lows at the 308 level, and like I said before, the highs are right around that 347, 350 level. Let's go and make this one yellow, and we'll make the smaller range orange. So this kind of two patterns going on. You can see that when prices get to the extremes of the bigger channel, it sends prices to the opposite side, and then sometimes if we're near the midline, we start some other smaller pattern, and you can see that the smaller pattern was also in play. So right now the price action can go both ways. So whenever we're in a range and we're in the middle, it's kind of, you get the choppiness like you can see here. It's not easy to predict like before, where it was just an uptrend and prices going higher, or something like this where it's a downtrend going lower. Now we're just going sideways. So since we came off the upper side, there is a possibility for us to go to the lower side. You can see here, this would be the first leg down, and this would be the second leg down, and it's right at the 309, 307. That's a potential target. However, there's a possibility for the longs to defend this level and push the market up. And if they do accomplish that, then where can we go next? Looks like the target is right at the 366 level. And there is a gap right here that could be filled, and it'll be right at the 332 level. And there are multiple gaps that could be filled on the upper side as well. So I'm a little bullish, but not that much. I'm probably 55% bullish, 45% bearish. There is a chance for the market to continue selling off. As you can see, all the tech stocks and even the S&P 500 are pulling back. So usually Facebook is going to have some weight to the S&P. So if Facebook is pulling back, then the S&P is going to pull back. And if Apple pulls back, the S&P is going to pull back. So if all these tech stocks start pulling back, then the S&P is going to also be dropping. So as right now, the market dropped a lot today, but it was a big reversal. So that takes a lot of buying pressure, and this could look promising. So we could see some higher prices very soon, coming in the next couple of days and the couple of weeks. This could lead to a breakout side of this range and send prices higher. I still believe we will reach the all-time highs at the 384 level, 385 level. I think we're definitely gonna obviously blast past it and probably even hit the $400 level. As right now, my bullish thesis has not changed. It still looks like technically we can still easily reach those levels. However, we are caught inside of this sideways action, and we just gotta wait till it plays out. But other than that, that's all I have. Let's go and wrap this up on the weekly chart. So like I said before, on the daily chart, we are in this sideways action, and we haven't broke free from it pretty much since October. So there's a possibility that we might see just more sideways action. But to me, I think the sideways action looks like it's coming to an end, and we might see a breakout soon. Regardless, I'm still bullish, and I still believe we're going to hit the $400 level. It doesn't really matter what we do in this small short-term price action, but I'm just letting you know what can potentially happen. As you can see here, we are at support at the 320 level on the weekly chart, and there's a little gap that could be filled, and also looks like this could be a short trap. So I'm thinking prices will be pushed up one more time to the 346, 347 level, and then from there I doubt the sellers will hold back, can hold the bulls back. I think we might see a breakout this time, and this probably will lead to higher prices. I'll be surprised if we don't. I'm still thinking sooner or later we will see this breakout, and the longer it plays out, the less it looks good for the bulls. I think they need to do this quickly. You can see that there was this downtrend in play, a break outside of the channel, and a move to a new low, and that's what I expect for this uptrend too. We had a break outside the channel, and I still expect a retest of the highs. Normally when we're inside of a channel, we retest the previous highs or lows. So in this case, that's why I believe there's a high certainty that we can reach the all-time highs once again and probably even exceed it. So this looks like a long setup. If you're an aggressive trader, they would be going long right now. Stop loss right above this candle and targeting the high side of this range at the 348, 350 level. And if they're even more aggressive, they'll probably just hold their position and see if prices can break through it, through the lows, and continue into the 350s or 360s. And probably now would be a good opportunity for that trader to do that. You can see there's also looks like there's an inverse head and shoulders in play. You see that this is a shoulder here, and this is the head. You can see that this is the inverse head and shoulders pattern, and normally that just leads to higher prices. It's kind of a reversal pattern, but it only works, you know, if the context of the market is right, and the context of the market looks right to me. Doesn't look like we're inside of any downtrend. Let me just take a quick look at this. There is some resistance, not really. There's this possible trend working lower. It's not really that touching the swing right here. Let me just take a quick look again on this chart, on the daily chart. Let's go ahead. I don't think we're in the downtrend. It looks like we're just looks like the downtrend is finished to me, and we're just in some sideways action, and now it looks like we're possibly gonna make that push up. So that's pretty much everything I have for Facebook. I think I'm still bullish as right now. What would make me change my mind is we break the possibly the $300 level, and we find some type of resistance and then continue lower. But as right now, we haven't done that yet, and I still think we could see higher prices. There's still a lot of bullish signs on the chart, and we'll go from there. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channels. You might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also, share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.